Are you trying to get an SBA loan? We're probably wondering what options exist out there for you if you're a woman-owned business, if you are a veteran with their own business, or if you're a new business owner. There's a ton of options out there, guys, and today I'm here to tell you all about it. Today, we're actually going to go deep into SBA funding, what those options are, because it is literally just an absolute savior for a lot of companies out there. If you're a woman, if you're a veteran, if you are a minority, Black, Hispanic, it doesn't matter. Okay. So by the end of this training and this course today, I hope that you walk away and I plan on you walking away with a very, very, very strong, solid grasp of the SBA loan landscape that's including the benefits, the requirements, and then which options are going to be the best for you, which is why you're here, right? I'm Dominique. I'm a business funding specialist, your business financing expert, your business credit expert, and I help you get approved for funding. I've been in the alternative finance space for many, many, many years. I've helped startups to multi-million-dollar businesses with being able to get the funding that they need. I started this channel to be able to provide you with all of the tips, tactics, tools, resources that you need that are going to make you attractive to the lenders and underwriters and credit issuers that are looking at your loan application. DFX is a financial literacy and funding platform that helps founders that traditional banks consider unbankable. So on this platform, we connect you with the right funders that fit exactly what you're looking for, your industry, your unique situation, that are going to help your company grow and scale. We upload new videos here every week for entrepreneurs, small businesses. So do me a favor and hit that like button, that subscribe button, and watch to the end so that I can continue to make more free courses and trainings just like this one. So let's get into it. So first, you might be saying, why would I even consider an SBA loan? Well, let me show you something. So first, why would you even consider an SBA loan? Well, SBA loans are going to offer you some of the best terms and financing that you're going to find in business lending. They come with longer repayment periods. And what does that mean? Well, that means lower monthly payments for you, right? So that's great. Okay. It's great if you want to try to manage your cash flow, especially if cash flow is tight, but also for people who want to manage low monthly payments. So you could ask, the biggest companies in the world, what do they want? You could ask any company in the world, what do they want? They're all going to tell you the same thing because it doesn't matter who you ask, right? Everybody wants to pay less. So one of the leading benefits of SBA funding is longer repayment periods equaling lower monthly payments. Second thing here, guys, they're backed by the SBA. Okay, what does that mean? Well, that means lenders, they're way more likely to approve these loans and they have ideal rates. It also means they're ideal for business owners that are actually looking to secure business financing. Okay, now qualification requirements. Getting SBA financing is not a walk in the park. You guys have to know that, okay? But when you know what they're looking for, that's when it becomes easy. That's when you start to create leverage for you guys. So let's dive into what the three key criteria of that are. So the first thing is going to be good credit. Okay, good credit, we're talking about like 680 and above. Okay, current, no delinquencies, no collections. Most SBA loans, what are they looking for here? Well, they want to see that you're financially responsible. So if you're not hitting that credit point right away, don't worry about it. Okay. We already know it's kind of a no-brainer. If you're looking for certain types of financing, they want to see a good, solid credit score. So you can fix this, guys. Don't let it hold you out just because you don't have the right credit score right now. Don't wait. Don't sleep on it. Don't push things out. I recommend knowing, right? Take accountability. Hey, I don't have great credit, but I do want SBA financing down the road. This is something that I'm going to work on. Second thing that they look at is collateral. You're going to need some assets, guys. You're going to need some assets to back up some of these larger loans. We're talking about, equipment. We're talking about real estate, accounts receivable that counts as collateral. It could be, lenders, they have very specific criteria when it comes to what these collateral amounts will be, and they're all different. They also want to see strong cash flow. Okay, they want to see some reassurances here, guys. They want to know that your business is actually generating enough revenue to make the loan payments, right? I mean, that makes sense, right? It makes sense to me. So banks, they sometimes they may discourage newer businesses from applying, but do not be discouraged, friends. Okay, I'm here to tell you that SBA loans are available. to newer companies too. All right, so don't be discouraged. You can still get an SBA loan, but I want to look at some of the options that might work well for startups, but they also work well for businesses as well. But first, guys, thank you so much for tuning in. Okay, make sure you drop your name, your company name, where you're from, so that I can give you a shout out and then give you a thank you and promote your business for tuning in and subscribing to this channel. Anyway, guys, number one option here that we're going to be talking about is the SBA 7A loan. And if you've looked into anything SBA related, right, you've probably seen this phrase. It is one of the most flexible funding options for just general business purposes. Okay, so this loan is going to cover everything. They're covering hiring, it's covering marketing, it's covering purchasing inventory, it's covering or just expanding your business, okay? Whether that's a physical location or whether that's technology, whatever that may be, it's general business purposes. So most entrepreneurs, they start with this 7A loan because it does provide a significant amount of working capital with some pretty manageable monthly payments. But again, we're talking about broad and general, because this is obviously, a case by case basis. And especially when it comes to underwriting, but typically speaking, a lot of manageable monthly payments are attached to 7A loans. And these amounts can go up to 5 million, guys. So makes it an obvious choice if you're looking to make substantial investments in your actual business. So imagine you're planning to open a second location, or you just need to hire more staff, or you just need to launch this new marketing campaign to get going. This SBA 7A loan can absolutely cover these expenses, and it gives your business the financial lift that it really needs at that time. You've also probably heard of this one, the SBA 504 loan. If you've searched anything SBA, then this has popped up too. I guarantee it. Okay, guys. This is more for things like real estate, fixed assets. So, machinery or any form of like large equipment. And this is for you. If that's what you're looking for, this is where you're going to be looking at, because it has a slightly different structure. It involves a partnership with the SBA, with the bank, the development company. So it's 100% absolutely excellent for large capital needs. Okay, and it tends to have very low fixed rates. Okay, longer repayment terms, up to 25 years. Who doesn't like that? Okay, up to 25 years. That's a huge, huge advantage for covering substantial purchases without draining your finances. All right, guys. So if you have questions about any of this that I'm talking about, then make sure you text those questions to 888-488-4145. So now that we've covered the two big ones, the 7A and the 504, let's talk about the lesser known options that you probably don't even know are out there, okay? So the first one I want to get into is microloans. These are incredibly overlooked, and it's a shame, right? Because they're a great resource for women, for veterans, for minorities. So they do microloans of up to 50,000. They are averaging around 13,000. So it's great for you if you're just starting and you want to boost. Okay. So you can get these through CDFIs, you can get these through nonprofits, you can get these through community organizations. Okay. So this makes sense, right? If this lines up with your business, then this could be a good fit, especially if you don't need a huge loan, but you do want to cover those initial smaller expenses. So let's say, for example, you're opening up like a smaller shop. You're going to need funds. You need funds to buy inventory. You need it to pay for that initial rent, right? So a micro loan here can provide that initial cushion for you without any sort of like overwhelming debt that's attached to it. And then acquisitions. This is where you're buying a business. So you're buying a business, you're buying real estate. This is where it comes in, because SBA can support you with 80 to 90% of the actual purchase price when you're buying an existing business. Now that's huge, okay? It's a good window to be in to cover that purchase price. And these loans make acquisitions a lot more accessible. Many times you can negotiate with the seller to finance the remaining 10, 20% with a seller held note. that gives you flexibility in covering total costs without needing to come up with some sort of massive down payment yourself. So these are really beneficial. They allow you to walk into an established business without having to deplete your own cash reserve. It's a solid option if you found a business that makes sense for you. And if your vision is, hey, I want to come in here and I want to take this over, I think I got what it takes, right? Have you ever heard of somebody called Cody Sanchez? She's really big on talking about like the great American wealth transfer and buying boring businesses. And you can use seller financing and SBA financing and things like that to acquire businesses. That's exactly what we're talking about here. Now, there's also startup funding. Typically, this is specifically for things like new ventures. So they're hyper-focused, okay? It could be hundreds of thousands of dollars here or even millions, but this obviously depends, right? It's a case-by-case basis. So there are a few things that you need to know to qualify for these loans. You need strong personal finances. You need good credit. We talked about that. You need probably good spelling, since I spelled credit wrong. You need some good assets. You can also use a cosigner. All right. So oftentimes a little bit higher net worth. Okay. But think about it like this. You're asking lenders to believe in a brand new concept. Okay. It's a brand new concept, a brand new idea. They need to see or have some sort of evidence that you're financially reliable. Right. So think of it as a vote of confidence. This is sweat equity. Okay. If you've done the groundwork, you put together a solid business plan, you can show your commitment. Maybe you've already put some money in, you've bootstrapped thus far, then the SBA startup loan can be that green light, right? That green light, guys, that brings that idea to life, especially if you are a woman, if you are a veteran-owned business, if you are a minority-owned business. They love working with you. Okay. They are incredibly versatile and with the right preparation can absolutely be accessible to a wide range of businesses. Okay. Doesn't matter if you're starting, doesn't matter if you're expanding, doesn't matter if you're buying an enterprise. Okay. I encourage you explore all of these options, especially if you're seeking out long-term financing, especially if you're looking for favorable financing with favorable terms. Now, remember, SBA loans, they require a lot to qualify. We touched on that, right? I need you guys to know and be realistic here. These loans don't happen overnight, okay? On our platform, especially if you're a newer business, okay? So on our platform, we work with SBA Express loans. We can move a bit quicker than the traditional banks. But here's a tip I can tell you from the underwriting perspective. You want to make sure that you have things aligned, because if these factors that we're going into don't hit, then it's going to extend your application. Okay. So instead of it taking 30 days to fund, you're pushing it out 60 days possibly, because you've got to go back and tackle these things. The first thing I need you guys to do, the very first thing I want you all to do right now, today, I need you to make a commitment that you are going to separate your personal and business finances. 100%. Okay. No more of this lackadaisical, oh, this is how I've always done it. No. I need you to separate your personal and business finances, because from an underwriting perspective, I'm telling you, if you go in and you're commingling your funds and you go and apply at a traditional bank, or if you go and apply randomly online with an online lender, you be aware that they're using algorithmic systems. Okay. They have computers that are processing your applications. And before you get to the person, they're seeing if you hit some of these credibility points first. And if your personal business finances are commingled, it can look like you're making less than you actually are. We had a client that was making about like 40, 50 grand a month, but because she was commingling her finances when we first sent it off, they were like, oh, they're only making about 5 grand a month. So we have to go back and prove and track down all of the finances, the accounts, and do that. Most places are not going to do that. Okay. That's the benefit of working with a platform like DFX. But separate your personal and your business finances. This is crucial. It will 100% hold up your application. If you walk into a traditional bank with messed up finances, you're likely going to get denied. Okay. When you work with us, like I said, we're able to create this customized loan package for you that explains and breaks this down, but it takes time and it's going to elongate it. And so take some accountability here, guys. Okay. You have to know that this stuff is not on point, right? And only you know, okay? You're the only one that really knows. So you know if your stuff was messed up, right? So you know if your stuff was messed up, we're here to help you fix it. Don't be ashamed. Don't worry about it. Everybody's been there, okay? Especially small business lenders and entrepreneurs. We all understand that new businesses and entrepreneurs often sacrifice their personal credit to build their business. So, hey, it's okay. Get over it. We'll fix it, okay? So make sure that you have everything, I'm talking about everything updated. All right. You need to have, everything, your phone number updated. You need to have your address updated. I really want you guys to be checking. If you're buying a business from somebody else, make sure you're checking the liens. Because we had a client that purchased a business, was about to get a $250,000 factoring line. And at the last minute, our lender found out during the due diligence that there was a lien from the previous owner on the business, and the lien was for like 3,000. But this guy was pissed about it. But there's nothing that the lender can do about it. You got to go back and you got to take care of it. So he can either pay the 3,000 or go back to the previous owner and ask him to pay the 3,000, which he didn't do. So he did not get the $250,000 funding. So there's nothing the lender can do about certain things. So don't get upset about it. Just fix it. Okay. My third tip here for you guys, establish business credit. I have seen applications for funding that were approved for $150,000 because the owner had business credit versus an established business that was approved for less because they didn't have true business credit. Okay. They didn't have true business credit. Okay. And I'll dive into that later when I say true business credit. But guys, I see it happen all the time. Just because you have a longer time in business doesn't mean you're going to get approved for more. Doesn't mean that, you have an advantage as opposed to somebody else. Are you hitting all of these points, right? So we've had companies that were in business longer, that generating revenue, and then other companies that were in business less amount of time, but they had really robust profile, business credit, business plan. They were starting to generate revenue. They were working on their personal credit. So all of these factors allowed them to get a higher startup capital loan. This one I cannot stress enough. Please do not use your personal credit cards to fund your business, especially because you don't have to. So I know that, a lot of clients, we've had many clients that have started out, in the 700s, even 730, 740, in credit score. And then they fell off to like a 6 something, 5 something, because they're building their business with credit cards from the beginning. Now, let me explain what I mean by that. I'm talking about a Wells Fargo card, Chase card, Capital One cards. Okay, these cards are going to give you what, 5,000, 7,000, 10,000, maybe 12,000, right? And they say to you, this is for starting your first business loan for business capital, which is great. Of course, you want to be getting those type of lines, right? But you want to be investing your PG, because what are they doing? They are hitting your personal credit every single time. You are getting an inquiry every single time. So even if you don't qualify and you're trying to apply, you're getting an inquiry. Now, let's say you do qualify. You've got this $5,000, $10,000 credit card with Bank of America, Chase, whoever. Now, you're using it to fund your initial startup, to fund your business. You're using it for things like gas. You're using it to purchase a car. You're using it for fleet maintenance. You're using it for car maintenance. You're using it for, Home Depot, for Amazon, to build for your furniture. You're using it for your supplies at Lowe's. You're using it at Tractor Supply. You're using your personal credit score to fund the expenses of your business. What does that do? Eventually, you're going to hit a wall. All right, you're gonna hit a wall. Now, what you need to be doing is taking all of those same items and moving it over under your business, under your EIN, because now you're offsetting up to 90% of your business expenses. You're saving your credit score, and you're getting these supplies on net 30 terms, net 15, net 7, net 60, depending on the vendor. But you're getting them on net terms, which allows you to go out, do the job, and then use the money from the job to pay the invoices. So you're giving yourself more flexibility in your cash flow, and you're saving your credit score. I have seen so many companies, especially women and especially veterans. Why? Because they don't have access to all of the financial knowledge and tools and education and resources that a lot of other major companies are doing. So they're not doing this, okay? So they're save your PG, save your credit score for when you really need it. Establish business credit, fix your credit score, and then And then you use your personal guarantee to get larger financing terms. Don't do it right now in the very, very, very beginning, okay? This happened with my client, like I told you, but we helped her free up her cash flow. We offset 90% of her business expenses, and we will do the same thing for you. So guys, let's take a step back, okay? Because every single thing that I just said is possible to you, but none of it matters, okay? If you don't establish your credibility, your foundation, it doesn't matter. If you're still in the process, and if you're going, oh, well, I'll do it later. Well, I might change this, but I don't want to change that. And well, I don't have time to do it right now. Well, then there you go. All right, that's your answer. You know, here's what they're looking for. You made the decision that you don't want to take the time to fix it, but you also know that you need the funding to grow. What's it going to be, right? It can't be all of it. So we have an excellent step-by-step process that walks you through getting business credit and funding without having to waste hours online, without even wasting all of this money trying to find the right answers and how to find the right path to fund your business. And the best part about this is once you figure it out, you can duplicate it. You can do this over and over and over again. So if you're a woman-owned business, if you're a veteran-owned business, if you're a new entrepreneur, small business owner, then make sure you're coming here. You're coming here, you're tuning into the Domino Effect every single week because we're providing those free courses, free trainings to help you succeed, to help you get better approvals, better rates, better terms. We're trying to get 30 more businesses funded by next year. Okay, we're finishing this year strong, but our goal for 2025 is to get 30 more businesses funding, 30 more women funded, 30 more veterans funded. So come here and get access to your free courses and your free trainings. So that's it. If you follow these steps, then you're on your way to establishing a credible foundation. And now I want you to do two things. First, I want you to claim your free business credit building guide. It's a step-by-step guide to help you get started. And the second thing I need you to do is go ahead and speak with one of our advisors. Schedule your one-on-one funding planning session and see what you can currently qualify for. And if you're not yet qualified, then we walk you through the next steps to get you there. Thanks guys for watching, and I hope that you got a lot and you learned a lot from this course. Did you get value from this training? Then go ahead and hit that like button, that subscribe button, so that I can continue to make more free courses and trainings just like this one. See you next time.